Because I think this theme of regulation is really going to be a very strong theme for the year, and so it's very pertinent that this is our first panel for the year. So I'm going to pass it over to, well, Colleen's our host, so she's also on the panel, and she's provided the drinks for tonight, so I just wanted to introduce her, and also Shepherd Mullen is a great law firm. I'm totally biased because I've worked with them for a couple of years now, but they are fabulous. I just never met a better crew. So please go to Colleen afterwards if you want to speak to her. So now I'm going to pass it over to Mark, and Mark's going to get everyone to introduce themselves.
Thanks, Pamela. Well, I'm pleased to be here. I'm Mark Albertson. I write primarily for SiliconANGLE Media, covering the enterprise tech space. And I think this will be a good discussion tonight. I was at CES last week and filed a story talking about the discussion of digital money, the crypto space, blockchain, and the feelings were surprisingly upbeat. And also it'll be interesting to see from our panel if, at least in the Regtech space, that has carried over. So let's just kick it off by having each of you introduce yourselves and your involvement in your companies in the Regtech space very briefly. Perla, do you want to start?
Thank you. Hi, everybody. My name is Perla Stoeckert. I'm the Chief Compliance Officer at Tipalti. We are an automated payables operations system. In a nutshell, we help mid-market companies automate their accounts payable solutions, and we're able to assist them not only from all their financing needs, but also with some compliance needs, such as tax forms and things of that nature. Before that, I've been in the payments and the FX space for about 15 years. So I have extensive experience in Regtech and FinTech. All right, with that, I'll pass it over to Ben.
Great, my name is Ben Duransky. Hi, everybody. I run a company that's making advanced transaction monitoring software. We're using artificial intelligence and machine learning, as well as some new data sources, to help better detect criminal activity in the financial system. We're looking for really bad things like terrorist financing, human trafficking, money laundering. We're initially running a product line out that focuses on transaction monitoring with an expansion into KYC, CIP, and some of the other three-letter acronyms that we've all become familiar with. My background prior to this is I am an attorney by training, and I was hired at Facebook to do legal work around payments. That quickly morphed into me serving as Chief Compliance Officer of Facebook's payments business, which if you haven't spent a lot of time playing Candy Crush Saga, you might not realize Facebook actually has. But between the games business and the idea that we can send each other money on Messenger, Facebook had developed a full program. So that, in association with sort of my background and working closely with my awesome co-founder, Andreas Bayer, who'd done this kind of work at Zoom and PayPal, led us to think that there was a better way to do this monitoring than banks had been in the past.
Hey everybody, Michael Gilroy. I'm a partner with Canaan Partners here in San Francisco. Canaan is an early stage venture firm, been around since 1987, raised $5 billion over 11 funds. Current fund is $800 million. We are lead investors at the seed through Series B. Series A is our sweet spot. Take board seats, very operationally involved with the companies that we invest in. FinTech is probably our single biggest vertical. We've been investing in this space since 2007, which started with the first institutional money in the lending club. Since then, and about 35 other companies across FinTech, including Beam Solutions, Circle Up, Scale Factor, and many others.
Hi, Colleen McDonald. I'm a partner here in the San Francisco office with Shepherd Mullen. I've been practicing in the structured finance and securitization space for many years. My interest in the Regtech space really stems from my representation of clients both on the financial institution side and on the borrower issuer side. We bump up against regulatory problems all the time, and I think that this evolution of Regtech is just a fascinating area and one that's going to be relevant to all of us in the next few years. So.
Okay, great. Thanks, Colleen. So I know that the topic tonight is obviously the future of Regtech, but let's set the stage by just looking back at the past year. What has the past year been like in the space? What are your feelings, thoughts, and opinions on how 2018 went for Regtech? So who wants to start?
Well, I guess I'll start at the end of 2018 with was probably the holiday gift that all Regtechs were hoping for when FinCEN, the Financial Crimes Enforcement Network, came out and said that it was okay for banks to use new technology, and that in doing that, even if they found bad things that they should have caught before, they weren't necessarily going to be held liable for that. Which is a big change, and it's something that we really welcomed in the industry. I think that highlights the trend that I identify as the trend of 2018, which is a closer collaboration between regulators and the Regtech industry, and of course the financial services companies that we all work with.
I would agree with Ben. I think there's been more of a partnership in the financial industry. There's been this talk about Regtech, as a buzzword for quite some time, and it's no longer this flashy thing. It's just become more and more of a reality. And I think financial institutions, whether they're traditional financial institutions or MSPs or different things like that, they have seen a need that technology can be a tool that can help them meet their regulatory obligations while still being able to maintain some balance. So I think as it continues, I think the different management teams and the different board of directors are seeing that more and more this is an area that they should invest because it will help their business overall.
Colleen or Michael?
Sure. I guess I would add from my legal perspective that I think we've seen regulators embracing the technology that can be used to reach out and engage with with their constituents, with the financial services companies in particular. You see, there are, I think FTC has a blog that they're using now to set some principles for their stakeholders to follow, and sort of like taking, instead of a rules-based approach, taking a more principles-based approach. The CFPB has a new head as of December 2018, and they came out immediately with some I think some pretty significant and welcome changes, including a regulatory sandbox at the CFPB. So we'll see how that goes. So I think the regulators embracing the technology is really positive coming out of 2018.
Yeah, as I think about 2018, two things really stand out to me. One was a year of crypto, and I'm really surprised nobody said that. That was going to be the first thing that came out. And the second thing is a really big fundraising round by Plaid. For those who don't know Plaid is a company that acts at the infrastructure layer for companies and third parties that want to bring financial data into their businesses, right? And so what this means for everybody else is that more and more companies are becoming fintechs. And for a long time, people weren't quite sure how big that market was going to be, but Plaid is now a massive business on its way to an IPO. And so I think the combination of those two things means that regulators now have their hands full. They're no longer just regulating large financial institutions, they're regulating a lot of crypto firms and a lot of financial technology companies that now are dealing with consumers' money.
That's a good point. So in preparation for our panel, I was looking online and found a study that showed that the two primary underlying technologies for Regtech these days are basically data analytics and AI. Now that's today. Looking ahead for 2019, perhaps beyond, do you think that will change in some way, or at least what role do you see playing out for AI data analytics in the field that you're in? Who wants to take that one?
Yeah, I think Regtech and AI are going to be kind of one and the same moving forward. I think as you look back at history, these tools are not available but the amount of data and the types of data also are not available. And there's just no way that technology companies and regulators alike are going to be able to keep up with this, really transformation of the data and regulatory landscape without using advanced machine learning.
I think also globally, if you get out of just the US, but just, as a whole, a lot of regulators around the globe are starting to, utilize systems with AI in order to help them, regulate those transactions and being able to actually analyze those transactions. In a lot of different governments around the world, there are obligations to report all of your transactions, either on a daily basis or on a concurrent basis. So they have these massive amounts of data, and the only way that they themselves are finding ways to deal with that is through AI, which also helps change that perspective, and it makes them more collaborative with the industry and seeing the need there to continue that.
Yeah, I mean, this gets to sort of an almost tired refrain, I think, after a year of Regtech, but it is really impossible to just continue to throw human beings at these problems. The numbers that I just saw today were that city now has surpassed having 30,000 compliance professionals working there, which is astounding. And as we get more data, from some of the larger databases around the world, and also from, I think, the collaboration that companies like Plaid are bringing to the table, it just gets impossible to do this work with people. And so I think we're talking about reducing false positives, make it easier for people to do their jobs and stuff like that for most of the last year. I think we're now to the point where it goes beyond that and really is true that the machines and the way that we're using AI will make the smart people in these companies smarter, which lets them deploy critical resources in a much more efficient way. That means better investigations, it means deeper dives into the data. And I think that is the trend we'll see over the next year or two.
Colleen, do you have a comment?
I would just add that from the legal perspective and my banking client's perspective, it's all about managing risk. And when you're looking at, as we said, it's just monumental amounts of data. You think about transactions that you're doing with that data, moving towards real time and being able to see the regulators to see what the what the bank can see all at the same time is really the goal. And from what I understand, it's not I don't do the actual nuts and bolts of it, but the AI is really that's where we're heading, and that's what's really going to be exciting and make a difference in risk management.
All right, well, let's shift gears and talk a little bit about investment in this space. I saw a report that around the middle of last year, more capital had already been invested in Regtech firms in the first half of 2018 than in all of 2017 combined. So it was a robust year from an investment standpoint. Do you expect that to continue in 2019?
Well, I certainly hope so.
I guess I'm qualified to answer that. Yeah, no, absolutely. And I think the reason for that is what we just talked about right now, right? I think we're seeing, as a venture capitalist, I'm working with startups all the time, but I'm also talking to incumbents and trying to understand the issues that they're having, which is frankly what led me to invest in a company like Beam. The number used to be 12,000, by the way, and that was only a couple of years ago. And because of these changes that are happening across, and not just FinTech, by the way, it's across any company that is processing payments on their website. They really need to be thinking about technology for their regulatory needs. So I don't see it slowing down at all. That number in stat doesn't surprise me at all, and I think we'll see it continue.
Yeah, I think that what you're seeing is so many companies that you wouldn't think of as fintechs that are either realizing that they're going to need to get regulated as they grow up and get bigger, or are under pressure from their banking or transaction partners to run a comprehensive compliance program. And so there's places that you just wouldn't think of. I mean, I mentioned Facebook earlier, which is, I don't know that a lot of people knew that we had a payments processor there. But if you look at all of the platform economy companies, I mean, Airbnb is named in the Paul Manafort complaint as a venue for moving money from people to Paul Manafort. We wrote an article recently on our blog about a money laundering scheme using Amazon's print-on-demand service, where people were selling $1,000 books full of just nonsense and extracting money from the system that way. And we have an article coming up, I think later this week, where people are laundering money through the video game Fortnite by virtue of charging stolen credit cards, reselling the virtual currency V-Bucks on a gray market, and then extracting the money through the system that way. Fascinating what's happening, I think, with that. And that does lead to more investment in the space, both in terms of companies that support these, and also in terms of just the platform economy companies generally as they become Regtechs.
Perla or Colleen?
Yeah, I think also the regulatory expectation has increased as well. So there's no longer this thing that just because you're a small company or because you're in tech or because of whatever, that's going to exempt you from the obligation. So as more and more players come on board, there is that heightened of the awareness that needs to take place. And I heard a stat a long time ago that apparently if you look at compliance globally, it's like the 5th largest economy in the world or something like that. So it's not something that's going to go away anytime soon, and it's not really going to be very much affected by like either the economy or et cetera. It's just going to be something that, you know, companies have to comply with. And in order for you to be able to manage a lot of your costs, actually Regtech can help you with that. And good, like how Ben was saying, in terms of managing your resources efficiently, I think that's really where the conversation is going and a lot of the investment is going, because companies need to figure out, okay, I'm gonna have to do this. What's the best way and the smartest way for me to do that? And employing technology will help you get there.
All right, so looking at the nature of regulation and covering the space myself on the fintech side, I always hear two sides of the coin. One is, well, the regulatory picture is getting better. They're warming up to the idea of, you know, alternatives. On the other hand, oh, look, the SEC just dropped another subpoena on somebody. So with your sense of this field, what is the level of collaboration right now between the companies that are doing this and the regulators? Where does that stand, and what do you think that picture will look like over the coming year?
Colleen, you want to take that?
Sure. Well, as I said, I think that the regulators are trying to maybe not all of them. Sorry about that. But I think that the governing bodies, the FINRAs, the FDA, and even the FTC are trying to get out ahead of some of the issues that are coming. And from that perspective, they're trying to, as I said, they're sharing some of the principle-based approach. They're also trying to embrace technology so that they can communicate with and manage the data that are coming out of the financial institutions and what have you. It seems to me there's a sense that the regulators get it, that if they don't keep up, they're going to become either obsolete or they're going to create more risk by not managing the system. And so I think that from that perspective, they do get it. The SEC they have their own issues, and I think Esther Pierce is going to save us all, right? She's crypto mom. She's going to save us all.
That's right. Yeah.
Okay. Ben or Michael? Don't want to touch that one, huh? All right. Well, let's try this one. So there have been plenty of startups created in the fintech and regtech space, and there are also signs that larger firms may be getting into the business. ForcePoint, the cyber division of Raytheon, for example, has an interest in expanding into regtech very soon. Is this going to be a trend in the coming year, maybe 2 years? What role do you see the larger firms playing, and how will that play out against the startup picture that exists there today?
Yeah, I think they will, and it'll be mostly through M&A. I think think we talked about this earlier, but again, the technology that is needed to combat what's going on today is really, I don't want to sound kind of elitist towards startups, but it's really a technological challenge that you cannot solve with existing architecture. It's very hard to go backwards and solve this problem with some of the tech stacks that have been built with the incumbents. So I absolutely think they will. They'll need to grow, and there are a lot of startups that they'll take off.
I think another interesting point with this is that, we've obviously now seen PayPal, we've seen Square, we've seen Stripe, we've seen quite a few of these companies and they have taken off. And, if you talk about the millennial generation, they're not super loyal, like I will only, deal with Bank of America and that's it. I will not touch another financial institution. They're not like that. They're not loyal. They don't express that type of loyalty. What they're interested in is easy solutions that will make their life, a lot better and that, they're able to do what they need to do. So I think that was a big call out to larger companies and big banks. I know the large banks all have now innovation labs here in Silicon Valley, where they're looking at different types of technologies. I think there is a lot of M&A. They are looking into acquiring quite a few different firms. So there will be some consolidation at some point. But I think, there will still continue to be some sort of consolidation, but fintechs will keep driving, I think, a lot of the growth as well.
Yeah, I sometimes it seems like Europe leads on Regtech a little bit, and in this case, I think that might be true. We are starting to see more M&A from the larger financial institutions to the technology providers in Great Britain and throughout Europe. I suspect that will continue here as well.
Colleen?
Yeah, I would just add that I think it's interesting that JP Morgan considers itself to be a technology company, not a bank. So there's no question that the banks are partnering with technology. They have to deal with Volcker Rule and other Gramm-Leach-Bliley issues, Dodd-Frank is what I meant to say. And in their ownership of investing in other funds and whatnot that are bringing the technology to the table. So I think that the banks are struggling with, do we bring it in-house? Do we develop it in-house? Do we partner? And then, maybe we merge after that partnership's up and running. And I think that it's really interesting, just a data point that I read in getting ready for the panel, that JP Morgan has developed this COIN program that is a contract review program. And apparently it's replaced, in 1 minute, the technology software can review contracts that would take humans 360,000 hours to review. And so when you think about the cost savings there, right there, that's why JP Morgan's a technology company. So yes, I think that there's going to be some acquisition, but I think a lot of partnering. I think that's how they like to do those investments and sort of test drive some of that technology.
No, that makes sense. So let's look for a second at the client side. What advice would you give to companies who are looking to, partner with a Regtech firm or take advantage of those services in some way? What should companies be looking at when they're considering this landscape, let's say over the coming year?
We run into a couple of different questions, I think, as startups in this space. One of them is, can we provide a full end-to-end service? And sometimes that's difficult for startups because we're working on transaction monitoring. One of our fellow startups is working on KYC as their sort of go-to-market strategy. And so we've had good productive dialogues with customers in this space where we've started to help put together a package of services where we are working with another startup that's sort of a parallel and compatible company. So I would say, I think, be open-minded about that possibility. We startups are relatively nimble and we work together pretty well. And so you're not necessarily going to have just one vendor, but at the end of the day, you end up with a better system altogether. At the bank level, I would just say continue getting open-minded about cloud-based services. At Facebook, I could get somebody through vendor management in a third the time if they were AWS, but when I go talk to a bank, It's like, oil and water to say that we're going to do this with some of the larger institutions. I think that trend is starting to reverse itself, and we are starting to see more banks with an appetite for cloud services. But I would say that that's something that the larger institutions need to get comfortable with, because it is the future of this technology.
I have a funny story. I was looking at a transaction monitoring vendor in my last job, and my company, or the company I was working for at that time, was on AWS. And I asked them, like, "Oh, are you guys on AWS? Or are you guys on the cloud?" And they looked at me like deer in the headlights, and then they told me, "Well, that's going to cost a lot of money, and that's going to be really troublesome." And I was like, "Oh." Needless to say, waiting over them. I think also, I think with Regtech, another interesting aspect is regulation touches a lot of different types of businesses. So it's not just, for example, anti-money laundering, or it's not just this or that. There's so many different areas that it touches. So I think the interesting thing about Regtech is that it really could mean a lot. One of the great things about the company I work for now is how much they've been helping both on the digital side as well as on the non-digital, the automation of a lot of that, what the finance departments and the accounting departments have in terms of like that tax compliance. Like, now we're in tax season, so, like all of their tax forms that you have to fill out and things like that, which there's a huge opportunity there. And, you have companies like Havage that are lending, and there's a lot of, Regtech solutions there as well that are helping them, provide loans to small businesses in, 7 minutes or something like that. So I think, from a customer standpoint, there are more and more solutions that are out there that could be really interesting to your business, whatever that type of business is, that could really help you get to where your end goal is. So I think it's an exciting space right now.
So I would just add, because I'm a lawyer, so I have to say this, I think there's always risks, when you're bringing vendors into the system. I'll just call them vendors, partners. And, so there's security issues around, allowing others to infiltrate the system. There's data breach. There are a bunch of different integration-related issues that companies really need to plan for who they're going to bring in. They need to make sure they have the policies and procedures in place so that their people are managing the process with others. So it's just not, it's an institutional decision that I think should not be taken lightly, but I think it's, it's certainly important, and it's what's going to happen. But they shouldn't enter into it without thinking things through.
That's good advice. Well, since you brought up security, let's at least get that out and talk about it a little bit. I don't know if any of you saw the news tonight, but there was a major breach involving over 700 million records. People's passwords, even encrypted passwords, have been dehashed. Apparently, people are still trying to get their arms around the scope of it, but there's been a steady drumbeat, as we all know, of breaches and hacks, particularly over the past year. So in the nature of Regtech, you have to collect a lot of data, a lot of that is sensitive data. Perla, you mentioned tax records. Are you concerned at all about the impact of cybersecurity in this field as you look toward 2019 and beyond?
I think there was a study done by PwC, if I'm not wrong, with CEOs, and I think their number one worry around CEOs in the world was cybersecurity for 2018. So I think it's a big topic, and everybody's talking about it. I think cyber doesn't only affect financial industry, but it also affects everybody else. Like Target, for example, had a massive breach. So I think more and more you see top management and board of directors and things like that talking about cyber and how you're going to invest in that and ensure that your company is going to have robust security so that all of that data that you do collect is maintained. I think also what's driven the conversation is in Europe you have GDPR, so if you have a presence in Europe or you have any European customers, you're gonna have to comply with GDPR. California as well released their own privacy law here, which is kind of similar to GDPR in a lot of ways. So I think just from a conducting business standpoint, that is something that you definitely have, in your mind constantly. In my role, I deal with it now more and more. I would say, 5 years ago, it was something that you would hear every so often, but you wouldn't think about it all the time. Now it's in my daily conversation. It's a constant thing of how we're going to ensure that all of our data is secure all the time. And I know my CEO it always has that in mind as well, because if you have a breach, your reputation is at stake, and the trust that your customers have with you goes away. And that trust right now is extremely valuable, especially for technology companies.
I'll just chime in. I think that Techlash, as I think it's been called, 2018, right, when they summoned, Google and Facebook and Twitter and who else to Washington to account, is an interesting development. And there's, as I understand it, a push from the kind of Silicon Valley and the tech giants for some kind of federal legislation on privacy so that they won't have to deal on a state-by-state basis. And I think in particular, maybe they're not so excited about California's new data privacy. So I think that, watch what goes on there. It's certainly, it's something that even, they might be able to get done on a bipartisan basis in Washington, which seems like a kind of a miracle these days. So I think that that's going to be an interesting development. And I think it's really a good development too, if they could get something passed federally, because we have so many issues in FinTech and Regtech with the different, 50 states rules and laws coming to play, and talk about regulatory issues that causes, right? So I think that could be a very positive development if they had a federal data privacy law.
Well, let's bridge into that discussion then from the data privacy standpoint, at least on a global basis. Perla, you mentioned GDPR, and obviously Europe has taken great strides in terms of enacting some very strict regulations with financial penalties in that regard. Other countries, like Asia, have regulated the space by banning cryptocurrency. Just, that's it, you can't do it in some parts of Asia. So looking at the globe, at the world picture, where do you think is going to be the next kind of regulatory push? Governing data, governing the kinds of things that are important in this space. It could be the U.S., it might be somewhere else. I'm just curious what you're seeing in other parts of the world.
Yeah, prior to this year, and I'll defer to the lawyers here, although I used to be one, I would have said probably Singapore or Japan, which were doing some really interesting things on this front. After this last year, I actually think that the United States will probably be the focus for emerging regulation over the next 2 years to a greater degree than I really ever recall seeing. The focus on privacy and issues that have come out of Silicon Valley over the last year and a half, I think, has really crystallized that as a potential need for regulators, and I think that they're undoubtedly going to follow up on that. It's one of those areas where even in a deregulating environment, you can still see regulation. Similar to anti-money laundering and counter-terrorist financing, there's always an appetite for protecting that.
Other comments, Michael?
I agree.
I do too.
It's unanimous.
Got unanimity here, okay. An executive vice president of Wells Fargo was recently quoted in a story I found as saying that banks who don't innovate in Regtech risk going out of business. That seems like quite a bold blanket statement, but is he right? How do you feel about that? Is that really kind of the picture that could develop over the next year or 2 years?
I think it is for the smaller banks. I think Wells Fargo is in any particular danger, but I think he's right that the pressure on the compliance departments and the bottom line at some of the smaller banks that we're in conversations with makes it clear that compliance has really become an expensive part of operating a bank. When you've got people that are talking about, can we add 3 more analysts, or what's that going to do, to the profitability of this set of 7 branches? I think that it really is a risk to their existence if they don't find another solution rather than just continuing to throw bodies at the problem. I don't think Wells Fargo is in any danger. Not from that way.
Yeah, I agree. I think for Wells Fargo it would be a confluence of factors, and the other factors, and you mentioned the bottom line are kind of startups eating away at the margin. We're starting to see a number of consumer-facing companies that are getting into the millions of users, and this is really starting to impact folks like a Wells Fargo. I don't know if folks saw the Robinhood announcement a couple weeks ago that they're going to have a checking account offering 3% rate. Turns out, and they said it was completely insured, turns out the regulator made a very public statement saying that in fact was untrue, and that they actually had never talked to them. But SoFi has also released a product that's similar, and the accounts are growing pretty dramatically, and so I think that there will be pressure on the margins from that side. In addition to the small banks that I think can be put out of business by even just one of these fines, also the fintechs, right? And so fintechs need to take this very seriously, because while a bank like Wells Fargo can absorb a fine like that, one of those fines will wipe out all of venture funding in one fine.
Good point. Well, so one of the dynamics of this, though, kind of looking at the flip side of this, is that, okay, either there will be businesses that are going to suffer as a result of not investing properly in a Regtech model, or they will, but because of efficiencies coming from the technology, there's going to be loss of jobs. Is this a possible scenario as Regtech grows in any viable market?
So I think it's really case by case. So you have to really pull out the individual vertical where the software is making these jobs more efficient. But I think let's look at something like transaction monitoring very specifically. And what that does is it allows the actual compliance agent themselves to process more, red flags that come up as the transaction monitoring system is pinged. And so I think it makes the bank safer, it makes everybody safer, but I don't think in that specific example it would necessarily take jobs away. But I think there are certainly other examples across technology where that has happened.
Agreed.
I was going to say one thing on the, actually back on the Wells Fargo question, that I think that and you guys know better than I, that as technology improves and becomes more, it becomes less expensive and more available. So I'm kind of hopeful that that process will, bring the compliance technology down to a price point where the smaller banks, the community banks, will be able to afford it. It will just be sort of, plug and play. Because I don't think that we want a system where only the big guys that can afford the super duper technology are the ones that are doing all our banking and all of our financial transactions.
I think going back to the question before, I think in terms of resources, there's going to be a lot of redeployment of resources. So maybe we find some automation, and I don't need to hire somebody to enter, key your name and social security into the system, but then I can utilize that resource in another manner that is more efficient. So I think there will be a lot of that, really deploying your resources where you need them and where it's going to add value, versus in, tasks that are now considered more menial, like data entry and things of that nature. To your example, in terms of the analysts, if you don't have a good solution that's going to help you, you're going to have an analyst that's just going to be looking at hundreds and hundreds of transactions, if not thousands. Is really a human able to understand that and compute that? No. So I think it's helping a lot of the departments really just become more and more effective. I think the danger is if you're an individual that doesn't want to grow and learn, and then I think that's where your job could be at stake. And there will be some individuals that, are like, I'm not comfortable where this is going. So that could be maybe where some of the sacrifices are, but I think it's not necessarily going to be like all of a sudden there's like massive layoffs in compliance. I think it's just a lot of redeployment and learning new skills and new things that we're gonna have to comply with.
Ben, did you have a comment?
No, I completely agree with that. I mean, I think that it's not so much that we are getting rid of jobs as it is that we're getting rid of really menial bad jobs that cause people to waste a lot of time. A 99% false positive rate is not at all uncommon at a big institution, which means somebody's job is to sit there and look at 100 things that aren't suspicious for every one suspicious activity report that they file. And that's just a lousy use of somebody's time. And so we take those smart analysts that are making good decisions about their investigations, learn from those, and then our system helps teach that back into other analysts. And so we'd like to think that those people have jobs, their jobs just get a lot better, and they get a lot better at them as a result of the technological improvements that we bring.
Connie?
Yeah, what I gather from what I read is that redeployment is really what, that's the end game. I do think that everyone in the future is going to have to be either a computer programmer or some type of a data whiz, able to build those machines. They even talk about, the legal industry is one that's really being disrupted, right, by technology, by AI in particular, and and as I said about the coin project, that JP Morgan has, so compliance is kind of legal to a large degree. So I think that there's concern certainly in the legal industry about where the job's going to go, and one common response to that is people are just the lawyers are going to have to know technology. They're just going to have to understand it and be able to apply it, and that's going to kind of be the future. So it's a little bit of an aside.
Yeah, and I will point out, it's not just this industry. I think, 5 years ago, crowdfunding was going to take my job, and then last year it was ICOs were going to take my job. So maybe a combination of the two will end up taking my job. But this really applies across, every single industry.
Maybe not ICOs, I don't know about that. Okay, so we've got a good discussion up here with the panelists. You've all made some good points, but this is an opportunity now for those of you in the audience tonight to ask your questions. So let's open it up and see who has a question for our panel this evening. Who'd like to go first? Questions?
Thank you. I believe that it was Ben who said, I think the U.S. will be the focus for emerging regulation over the next year. Can you add some more color as to why you think that? And any of you, please.
I'll start. I really am just reading the tea leaves. I think that there's a national conversation around data and the way that it's used that didn't exist a couple of years ago. And I also think that we're in an environment where there isn't much political downside risk to talking about protecting people's privacy, whereas there is with a lot of other regulations. And so it looks to me like that's just where this is coming together. But I think that there may be a much more intelligent opinion down here at the end from legal counsel.
I would. Thank you. I think it's the regulators get it that they have to keep up with the innovation and changes in what's going on with not only financial services but healthcare and new developments that are out there as well, like autonomous vehicles and cannabis. Those industries are sort of disruptors in and of themselves, and they're going to have to be regulated. So why not use the latest and greatest technology? And I think so. Therefore, the regulators have to understand what the technology can do. And so I think that they're kind of catching up now. And because we have sort of so many innovations ongoing in the marketplace, that it's right to have a lot of new regulation and be kind of in the forefront of some of these emerging industries.
So if someone's looking for a job, should they get trained for compliance and regulation?
Engineer, software engineering. Please.
Yeah, it
Yes.
seems like there's gonna be tons and tons of jobs then.
Absolutely.
Yeah, they'll take care of any loss of job problem, I guess. This gentleman right here.
Yeah, if everyone on the panel here is obviously on the forefront of both technology and regulation, and I think sometimes it's easy to forget the backlash, the resistance. I was just listening on the radio today about how many people in Paradise didn't have bank accounts. I think there's an estimate of 8 million people in America who don't have bank accounts. Distrust and also I think in some ways the crypto movement, right, there's a motivation or interest in sort of protecting privacy and not being subject to regulation. I don't know if you have any insight into how that kind of intersects with this Regtech space.
Crypto, protection of privacy, intersection.
So much there.
Lots on that.
I was just going to say that I think one great hope for technology in the financial services space and sort of speed and certainty of execution is hopefully more democratization of financial services, so that having a bank account is not going to be, it's just going to be something that you have like your birth certificate or your social security number. So I think that that's generally how these types of developments, what the evolution is and what the end game is, and hopefully that will play out.
I think, that's where FinTech really comes into play, because especially in the beginning of FinTech, there were a lot of companies that helped, for example, people in Africa that really had a very hard time getting a bank account. They were able to utilize their cell phones to, carry balances and be able to transact and pay their bills and et cetera, like that. So that's a really great use case of how we could help the underbanked or the underserved or et cetera in that sense. I think with crypto, with distributed technology and Bitcoin and et cetera, the reason why they came around was after 2008, they wanted a more transparent solution, given everything that happened with that economic downturn. So I think Regtech and FinTech, as we've seen at Tipalti more and more, is there's going to be more of a convergence, and they're going to mutually help each other. Hopefully that will, help a lot of people that don't have access right now to some of those financial rails to open that more and more to them. Just by you having a phone now, you could have a wallet and be able to store money that way without having actually to open a bank account at a Wells Fargo. So I think there's more and more of that access that's happening.
Yeah, I'd add to that, it's a little ancillary, I suppose, but I think one of the ways that Regtech can help with those problems is simply by making the services available to fintechs that are doing good work with the unbanked and to smaller community banks at a price point that's not absurd.
Yes.
And looking at the sort of history of selling software into this space, there is a very high price point that's been set by the negotiations between large players in the industry and giant banks that have giant piles of money to spend on this. I think that Beam and fellow fintechs and regtechs in this space are probably putting some price pressure on that world, which is ultimately good for everybody.
Yeah, I think one more, I'll pile on here in the fintech camp and anti-bank camp. But you look at name your big bank, and they're charging for a checking account $15 a month, and they're making that interest on the deposits that you have in that account. And that's got to be the most egregious product in the history of financial, products. Truly, there are companies like Bridget, Chime, Earnin, and many beyond that. They're offering free checking accounts, And not only are they doing that, but they're actually giving you your paycheck as soon as you earn it that day, right? So that's the other, massive profit center that nobody thinks about. You get your paycheck every 2 weeks or every month. You're effectively lending ADT, billions of dollars of float every month that they're making money on, and you're not getting the money, until some arbitrary date, right? And so there are a lot of fintech companies that are going after these problems because people are living paycheck to paycheck, and hopefully this helps to open up the market a little bit.
Question here.
So great conversation. There's so many facets to this that are new that I cannot see how the regulators are going to keep up. You have everything from like Venmo, which all my kids use. They don't use cash. They don't use an ATM. They don't use a check. So is that regulated? Then you have the great case with the Adobe print on, or Amazon print on demand and Facebook, and kind of these alternate value exchange platforms that have nothing to do with money at all, but are very, very viable. And then you have this little thing called acceleration of technology. And so to try to catch up to that from a regulatory perspective in a market that's changing so fast in compliance, and it's kind of scary, the level of the data integration that you're talking about. I mean, in most other things, this has been going on at a much faster rate for a very long time. And again, we're just barely hitting the elbow in the curve. I mean, how does the regulation keep up without becoming so onerous? And to your point, a 99% false positive rate is so far behind the curve when these alternative transactions are going to accelerate in addition to the standard transactions.
Yeah, I would just point out that as fast as the consumer companies are moving, Venmo and so on and so forth, the compliance companies are as well. Beam is moving just as fast to make sure they're keeping up with the changes in technology on these endpoints. And when you actually break it down and look at the technology that Venmo is using, it's also available to folks like Beam. And they can really monitor those transactions and accounts very effectively, right? And so I think it's more about educating the regulator in terms of what technology is able to do on both sides, and even putting it in their hands in some cases. So
It's less about their technology. They can run fast. I have no doubt. But what I'm curious about is how do the regulators keep up in this completely morphing landscape of different types of transactions, speed of transactions?
They need to continue to be educated, and I think it's very easy to sit back and beat up on the regulator. The reality is we saw them adapt and move very quickly to an ICO market that was really just catching fire last year, right? And so I think when they need to, they can act swiftly. I think it's not as swiftly as we would like, but yeah, I'll let you.
So payment systems, right, is, such a hot topic, and I mean, it's just such a huge issue for companies. You talk about, the Venmos and the other payment companies, but just in terms of just transacting money transmission, right, throughout the United States, throughout the world. So the Fed has a task force that is coming up with and working on a payment system where they're going to have a directory of all of the different payors, I'll call them, the Venmos and the what have yous, so that they'll be able to make payments to each other. So I guess what I'm saying is I agree with you 100% that this, when you think about the pace of this technology and trying to keep up your, it's kind of mind blowing, but it's, it's not going unnoticed. And, the regulators are, they're trying to at least address it, to be open-minded about it, to, embrace some of what they see as where they can actually make a difference and get involved.
I think another thing, I'll give California some credit actually. I think they're a great regulator. And they're always, extremely proactive and always looking at all these different types of business models. And sometimes the companies themselves are challenging because they pivot multiple times. And they're there every step of the way trying to help you. Sometimes they even give you ideas on how to do things and structure things in a way that it helps with the regulation. So, and New York is similar. Sometimes they take a while responding, but they try to always be there and be a partner. And a lot of the different regulators try to do that. And I think more and more we've seen that changing their attitude as a whole.
Oh, Ben.
Sorry.
Yeah, just there's one other point here that I think is worth bearing in mind with this, which is that there has developed sort of a set of shadow regulators within the financial services industries themselves. So if the regulator regulates Wells Fargo, and Wells Fargo is banking Airbnb is not a great example because it actually is licensed as a money transmitter, but pick any other platform company. Then the bank will come to that company and say, you know, you're moving millions of dollars a month through our system, and we don't have any particular visibility into that. So we need you to build out a compliance program, start monitoring your transactions, show us that you're doing this the right way, even if they're not directly regulated by the regulators. And so I don't know if that's the answer to this, but I think it's part of the answer to that is that regulated or not, the partnerships are pushing for these companies to start acting like they're regulated.
All right, well, I'm sure if you have additional questions, the panelists would be happy to stay behind and chat, but they've done a great job tonight. It's an interesting and it's also a complicated subject. It'll be interesting to see how it plays out. Could you please give our panel a warm round of applause? And now I'll turn it back.